there, everyone. I'm so excited to be with you again today. First off, thank you so much for taking the time to join us for this webinar. It's been a while since we last connected, right? Today, I'm Harry Lee, a member of the trading team at ninza.co, and I'll be guiding you through this session on the ApexFlow system. As a token of our appreciation for sticking with us, we'd love to offer you a special indicator if you stay with us till the end. I truly look forward to learning and growing together with all of you during this journey. Let's make this a fantastic session. As a thank you to everyone who joins our webinar, as usual, we would like to offer a free gift to traders who stay until the end. I'm sure many of you are already familiar with order flow, that powerful tool we use to track the flow of each candlestick. But even though today's tools have been upgraded to offer tons of valuable insights, there's still one thing that order flow can't do just yet, and that's automatically analyze and provide trading signals. This means that to leverage order flow effectively, traders still have to do the analysis manually. And that's where ApexFlow Zignal comes in. Its mission is simple: to completely eliminate the need for the manual analysis when using order flow, making everything easier and more automated than ever before. First, let's dive into the key components on the chart that ApexFlow Zignal displays, so you can fully understand how it works and make the most of this system in your trading. First off, as you can see right here on the chart, we're getting a push signal for a price drop. Next, you'll notice here there's a large dark pink dot. This is a signal showing that the buy side is being absorbed by the sell side. Right here, you'll notice a push signal in blue, indicating that the buy side is pushing the price upwards. Next, you'll see a green signal, displayed as a large green dot. This signal indicates that the sell side has been absorbed by the buy side. Below, you'll find a delta chart, where we can observe the buying and selling pressure within each candlestick. This delta chart gives us two key pieces of information for each candlestick: the delta volume and the buy or sell volume. For example, if the delta of a candlestick is positive, the delta chart will also show the buy volume for that same candlestick, allowing you to see the correlation between positive delta and buy volume. Next, you'll notice light blue dots on the chart. These signals indicate exhaustion from the sell side. On the other hand, light pink dots show exhaustion coming from the buy side. Additionally, when you zoom in on the chart, you'll notice a hidden footprint chart inside. This feature allows you to see the buying and selling actions of each candlestick, so you can cross-check and verify if the conditions for absorption, exhaustion, and push signals are accurate. When you zoom out, the footprint chart will be hidden, keeping your main chart cleaner and more organized. On the left side of the screen, you'll see a toggle button that lets you quickly turn the indicator signals on or off without going into the settings. Next, right next to the toggle button, you'll see a gear icon. This button allows you to customize and adjust different types of signals. And this is actually the heart of ApexFlow Zignal, which we'll explore more deeply in the next section. So now, that covers the main components of the system. And at this point, we're moving into one of the most important parts of today's session: the three core concepts that our team has carefully researched and integrated into ApexFlow Zignal. These three concepts are the foundation behind the three main types of signals in our system. First, we have the absorption bar. This happens when strong effort from one side gets absorbed and the final result favors the opposite side. Next is the exhaustion bar. This represents continuous pressure in the market, but with weakening momentum, eventually leading to exhaustion. And finally, we have the push bar. This is when only one side is actively participating, showing clear strength and delivering decisive results. And now, let's start with the first type of signal: absorption. To form an absorption candlestick, the system always focuses on two core elements: effort and result. First, ApexFlow Zignal looks for strong effort from the sell side. This means the sellers must show clear and powerful participation in the market. And this effort is evaluated through four main conditions. First, the candle must have a negative delta. Second, this negative delta must be higher than the average level. Third, the sell volume must be above the average. And finally, the candle must have the highest sell volume within a specific range. Next, we move to the second element, the result. At this stage, even though the sell side has shown strong effort, the final outcome does not favor them. Instead, it shifts to the buy side. This is reflected in the candle behavior. The candle closes as a green candle. the closing price is above the neutral range. The candle body is not the largest, and the candle range is not the maximum. When all of these conditions come together, the system confirms that the entire selling pressure has been absorbed by the buyers. In other words, the sell side tried hard, but the buy side won. To make this process clearer, let's jump straight into the chart and look at a real example. Right here, you can see an absorption signal where the sell side is being absorbed, supported by all four effort conditions. And the first condition you'll notice is this. The candle has a negative delta. Next, to help you better understand the second condition, where the negative delta must exceed the average level, let me take a moment to explain how to read the delta chart. First, you'll notice green and pink background areas on the delta chart. The green background represents the average buy volume threshold, and the pink background represents the average sell volume threshold. By using these background zones, you can easily see whether the current buy or sell volume has exceeded its average threshold. Next, on the chart, you'll also notice two additional thresholds, one in blue and one in yellow. The yellow threshold represents the average negative delta threshold, and the blue threshold represents the average positive delta threshold. By using these two thresholds, you can easily see whether the delta of each candle has exceeded its average value or not. Next, in each histogram bar, you'll see two main pieces of information for every candlestick, the buy or sell volume and the delta volume. For example, if the current candle has a negative delta, you'll be able to see how much of that delta contributes to the total sell volume within the histogram. The pink-colored section inside the bar represents the negative delta volume, and the entire histogram bar represents the total sell volume for that candle. So based on all the information we've just covered, we can clearly see that this absorption candle has now satisfied the second condition. The negative delta has exceeded the average negative delta threshold. Similarly, when we look at the average buy and sell volume thresholds, we can clearly see that the sell volume of this absorption candle has also exceeded the average sell volume threshold. Next, let's move on to the fourth condition. According to our rules, an absorption candle must have the highest sell volume within a specific range. In this example, the range is set to the last three candles. And as you can see, their sell volumes are 80, 81, and 183. So clearly, the absorption candle has the highest sell volume in this range, which means it fully meets the fourth condition. After confirming all four conditions, the system verifies that the sell side has shown strong participation. At this point, we move to the next step. Identifying the conditions that prove the final result favors the buy side. And the first condition we can see right here is that the current candle closes as a green candle. Next, to help you better understand the second condition, let's take a closer look at what we mean by neutral range. First, the system divides each candlestick into three different zones. As you can see here, if a candle closes above the blue zone, it is considered a bullish candle. If it closes below the red zone, it's considered a bearish candle. And if it closes inside the yellow zone, then regardless of whether the candle is green or red, we treat it as a neutral candle. This approach helps us filter out meaningless candles and focus only on signals that truly matter in trading. So here we can clearly see that the absorption candle has its closing price above the neutral range. This confirms that it is a meaningful bullish candle, showing that the buy side is in control. Next, we move on to the third condition. According to our rules, the absorption candle must not have the largest body within the range, and it also must not have the widest price range. So why do we apply these two conditions? The reason is quite simple. Here, we are looking for an absorption candle, a candle that represents a strong battle between the buy and sell sides where only one side eventually wins. During this process, both sides are actively participating and absorbing each other's pressure. If a candle has an extremely large body or an unusually wide range, then it no longer reflects absorption behavior. Instead, it represents a strong price push, also known as a push move, rather than an absorption signal. Next, let's move on to the buy absorption bar. This pattern works in the opposite way compared to the sell absorption bar, but it is still based on two key elements, effort and result. First, the system confirms buy effort through four conditions. Positive delta. Delta exceeds the average threshold. Buy volume above average, and the highest buy volume in the range. Then it checks the result. A red candle, close below the neutral range, no maximum body, and no maximum range. When all conditions are met, the system confirms a complete buy absorption bar. Now, let's move straight to the conditions on the chart. First, the system needs to identify buy-side participation. And the first requirement for a buy absorption candle is a positive delta. Next, the positive delta of the buy absorption candle must exceed the average threshold, showing strong buying pressure at this candle. The third condition is that the buy volume must also exceed the average buy volume threshold. Finally, the candle must have the highest buy volume within a specific range. In this case, the range is set to the last 3 candles. As you can see, the 2 candles before the absorption candle have buy volumes of 194 and 205. Meanwhile, the absorption candle has a buy volume of 300. So clearly, this candle meets the condition of having the maximum buy volume in the period. Next, after confirming strong buy-side effort, the system checks whether the final result favors the sell side through the following conditions. The first condition is that the candle must close as a red candle. Next, the closing price of the buy absorption candle must be below the neutral range, showing a decisive close in favor of the sell side. Similarly, for the third condition, the buy absorption candle must not have the largest body, and it must also not have the widest range within the previous N candles. Using the toggle button, you can access the conditions section to customize the rules and cycles the system uses to identify absorption candles. One important thing you should pay attention to is the conditions marked with N. The N symbol means that the condition is calculated based on a specific period length, and you can adjust this N value at the top of the conditions panel. Unlike absorption patterns, this model focuses on identifying weakening momentum from one side as price continues to move. Right here on the chart, you'll notice a light pink dot, smaller than the absorption signal. This indicates that the buy side is starting to show signs of exhaustion. For a buy exhaustion signal, the system confirms it based on the following conditions. First, there must be N consecutive bullish candles, showing that the buy side has been pushing price for a period of time. Second, the candle bodies decrease over N bars, indicating weakening buying strength. Third, the price ranges also decrease over N bars, showing reduced volatility. Fourth, the total trading volume decreases over N bars, reflecting declining market participation. Fifth, the buy volume decreases over N bars, meaning buyers are losing momentum. Sixth, the positive delta must be below the average threshold, showing weaker buying pressure. And finally, the buy volume must be below the average threshold, confirming that buyers are losing control. When all of these conditions are met, the system confirms that the buy side is in an exhaustion phase. Applying this to the chart, the first condition for identifying a buy exhaustion candle is having N consecutive bullish candles. In this case, N is set to 3, so the system evaluates the last 3 consecutive candles. Next, within this range, the system checks whether the bodies of the bullish candles are decreasing, which indicates weakening buying momentum. And as you can see here, these 3 candles clearly show a gradual reduction in body size, signaling that the buy side is losing strength. Similarly, the full range of the 3 candles in this cycle must also be decreasing, showing that traders are no longer willing to buy at higher prices and are trading within a narrower range. Next, the total trading volume of the candles in this cycle must also be decreasing, indicating that market participation is weakening. Next, the buy volume must also be decreasing. By looking at the delta chart and the histogram bars, you can clearly see that buying pressure is gradually weakening. This indicates that the buy side is reducing its participation in the market. In an exhaustion candle, the positive delta must not exceed the average threshold, showing that the buy side no longer has enough strength to compete with the sell side. Finally, the buy volume must be below the average buy volume threshold, clearly showing a significant weakening in buying activity. Next, let's move on to the sell exhaustion bar, which shows that the sell side is losing strength. The system confirms this signal when there are N consecutive bearish candles. Body and range are decreasing. Total volume and sell volume are decreasing. Negative delta is below the average threshold, and sell volume is below the average threshold. When these conditions are met, a sell exhaustion signal is confirmed. Similar to buy exhaustion, since the cycle is also set to 3, the first condition is having 3 consecutive bearish candles. For the second condition, the bodies of the bearish candles must be decreasing, showing that traders are no longer eager to sell at lower prices. And as you can see here, the candle bodies are clearly shrinking over time. Next, we move on to the third condition. The price range of the 3 candles in this cycle must also be decreasing. showing that the sell side is no longer trading aggressively at this level. In other words, they are starting to slow down their selling momentum. Similarly, within these three candles, the total trading volume must also be decreasing, indicating weakening market participation. Next, the sell volume must also be decreasing within the three-candle cycle, showing that the sell side is losing momentum. Sixth, the delta of the exhaustion candle must not exceed the average threshold, indicating clear weakening from the sell side. Finally, the sell volume of this candle must not exceed the average sell volume threshold, confirming the weakening of the sell side. Now, let's move on to the third concept, the push bar. This is the strongest type of signal in the system, showing clear and decisive dominance from either the buy or the sell side. To form a push bar, the system focuses on two main elements, effort and result. Unlike absorption patterns, in a push signal, the effort and the final result must be fully aligned. This means that strong participation must be clearly reflected in price action. First, the system evaluates buy-side effort through the following conditions. The candle must have the maximum buy volume over N bars. It must show positive delta. Positive delta must exceed the average threshold. Buy volume must exceed the average threshold. There must be a bullish POC bias, and the POC must be above the neutral range. When these conditions are met, strong buy participation is confirmed. Next, the system evaluates the result, which must show clear dominance from the buy side. The candle body must be the largest over the N bars. The range must also be the widest over N bars. The candle must be bullish. The closing price must be above the neutral range. The upper wick must be less than 15% of the total range. And the body must represent a large portion of the range. When both effort and result are strong and aligned, the system confirms a complete push bar signal. Now, let's move straight to the chart. Here, you can see a push signal forming, and the first condition is that the candle must have the maximum buy volume over N bars. In this case, N is set to 7, so this candle has the highest buy volume among the last 7 candles. The second condition is that this bullish push candle must have a positive delta, showing that buying pressure is dominating the market. Then, in the third condition, the system checks whether the positive delta exceeds the average positive delta threshold, confirming strong buying pressure. Next, and on the histogram bar showing buy volume and positive delta, the buy volume must also exceed the average threshold, indicating strong buying pressure. Next, in the fifth condition, the system checks the POC of the push candle, and at this level, the buy side must be in control. As I mentioned earlier, when we zoom in on the chart, you can see the order flow data inside each candle. And right here, you can see that the POC of this bullish push candle is green, indicating that the buy side is controlling this area. Finally, in the sixth condition, the system checks whether the POC of the push candle is located above the neutral range. When the POC is above the neutral range, it shows that the buy side is not only participating strongly, but is also actively controlling higher price levels and confidently accepting higher prices. In other words, most of the trading volume is concentrated at higher levels, clearly reflecting strong and decisive buying conviction. This is a clear sign that the market is being led by the buy side rather than moving in hesitation or consolidation. Next, we move on to the result. At this stage, the system checks whether the strong effort has produced a real outcome. The first condition is that the push candle must have the largest body within the period. A large candle body shows that the push momentum is very strong, clearly reflecting the decisiveness and dominance of the controlling side. Next, another critical condition is that the price range of the push candle must also be the largest within the cycle. When a candle shows the widest range, it means that price has moved aggressively throughout the entire formation of that candle. In other words, the buy side is not just pushing price in one direction, but is also actively trading across multiple price levels, from lower to higher areas, in a very decisive manner. Next, another essential result condition is that the push signal must produce a clear bullish candle. A bullish candle shows that the buy side is not only actively participating, but has also successfully won the battle during that trading session. This confirms that all the previous buying effort has been translated into real price movement, pushing the market higher in a decisive way. Next, another important result condition is that the closing price of the candle must be above the neutral range. When the candle closes above the neutral range, it shows that within that single candle, the buy side maintained control from start to finish. In other words, throughout the formation of the candle, buyers kept the advantage and did not allow sellers to push price back into the neutral zone. A close above the neutral range reflects a clear, decisive, and confident bullish move within the candle itself without hesitation. This confirms that buying pressure remained strong until the candle closed. Next, we move on to the fifth condition. In this condition, the upper wick of the bullish candle must not exceed 15% of the total candle range. In other words, the system requires the closing price of the push candle to be very close to the high without being too far away. This shows that throughout the formation of the candle, the buy side kept pushing price higher and was able to hold that level until the close. If a candle leaves a long upper wick, it means that at higher prices, the sell side stepped in strongly and pushed price back down. In this case, the buying push is no longer clean and decisive, and it is considered a failed push attempt. That's why a high-quality push candle always closes near the top, reflecting strong and consistent buyer control. Finally, we arrive at the most important condition for completing a high-quality push bar. In this condition, the system requires the body of the push candle to represent a significant percentage of the total candle range. In this example, the threshold is set at 60%. This means the candle body must account for more than 6% of the entire range. When the body occupies such a large portion of the candle, it shows that most of the candle's formation occurred in one clear direction, with very little resistance from the opposite side. In other words, the buy side maintained control from the open to the close. Candles that meet this condition are often large body candles, engulfing candles, or Marubozu candles, which reflect strong and decisive momentum. These are exactly the types of candles that qualify as high-quality push signals. Next, let's move on to the rule set for identifying a bearish push candle, also known as the sell push bar. Similar to the bullish push pattern, this model is built around two core elements: effort and result. However, in this case, all signals reflect strong dominance from the sell side. First, the system evaluates sell side effort through the following conditions. The candle must have the maximum sell volume over N bars. It must show negative delta. Negative delta must exceed the average threshold. Sell volume must exceed the average threshold. There must be a bearish POC bias, and the POC must be below the neutral range. Next, the system evaluates the result, which must also show clear sell-side dominance. The candle body must be the largest in the cycle. The range must be the widest in the cycle. The candle must be bearish. The closing price must be below the neutral range. The lower wick must be less than 15% of the total range. And the body must account for more than 60% of the range. When both effort and result are strong and aligned, the system confirms a high-quality sell push bar. Now, let's move directly to the chart. Similar to the bullish push case, we are using a cycle of n equals 7 for analyzing the bearish push signal. For the first effort condition, the system checks whether the signal candle has the highest sell volume among the last 7 candles. This indicates that at this moment, the sell side is participating very aggressively and creating dominant selling pressure. We move on to the second factor in evaluating sell side effort. In this condition, the bearish push candle must have a negative delta. This shows that within the candle itself, selling volume clearly dominates buying volume. Next, in the third condition, the system checks whether the negative delta of the signal candle exceeds the average negative delta threshold. When negative delta moves beyond the average level, it shows that selling pressure is not normal, but significantly stronger than usual. Next, on the histogram bar showing delta and volume, the system checks whether the sell volume of the signal candle exceeds the average sell volume threshold. When sell volume rises above the average level, it indicates that sellers are not only dominating order flow, but are also actively committing real volume into the move. Next, in the fifth condition, the system checks the POC of the bearish push candle, and at this level, the sell side must be in control. As mentioned earlier, when we zoom in on the chart, we can see the order flow data inside each candle. At the POC, which represents the price level with the highest traded volume, if it appears in orange, it indicates that the sell side is dominating this area. In other words, most of the executed orders at the most important price level of the candle are coming from sellers. This confirms that the bearish push is supported by strong and reliable selling pressure. Finally, the last factor for confirming strong bearish pushing effort is that the POC of the red candle must be below the neutral range. When the POC is below the neutral range, it shows that most of the trading volume is concentrated at lower price levels. In other words, the sell side is not only selling aggressively, but is also actively pushing price lower and maintaining activity in that area. A POC below the neutral range is strong evidence that sellers are fully controlling the price action within the candle. After confirming strong selling effort, the next step is to evaluate the result, to determine whether the final price action was truly driven by the sell side. The first condition in the result section is, within the 7-candle cycle, the bearish push candle must have the largest body. When a candle has the largest body in the cycle, it shows that selling pressure has been directly translated into strong downward price movement. In other words, sellers are not only active in volume, but are also successfully pushing price lower in a decisive way. Next, we move on to the second result condition. Within the analyzed cycle, the bearish push candle must have the widest price range. When a candle shows the largest range, it means that price was pushed strongly lower throughout its formation. In other words, the sell side is not only active in volume, but is also applying pressure across multiple price levels, driving price downward aggressively. Next, we move on to the third result condition. In this condition, the bearish push candle must close as a bearish candle, also known as a red candle. A bearish close shows that the sell side controlled the entire formation of the candle, from the open to the close. In other words, sellers maintained dominance throughout the candle and continuously pushed price lower. If strong selling effort does not result in a bearish close, the push signal loses its reliability. To confirm that this bearish candle is truly reliable, we move on to the fourth result condition. In this condition, the system requires the closing price of the signal candle to be below the neutral range. When the close is below the neutral range, it shows that the sell side maintained control until the very end of the candle. In other words, sellers continuously pushed price lower and did not allow buyers to pull it back into the neutral zone. This ensures that the bearish push candle is not a hesitant or indecisive candle, but a clear and decisive downward move. Next, we move on to the fifth result condition. In this condition, the lower wick of the bearish candle must not exceed 15% of the total candle range. However, this percentage threshold can be customized based on your own trading style in the settings. When the lower wick is too long, it indicates that buyers stepped in strongly at lower prices and pushed the price back up. In other words, sellers were unable to hold price near the lows until the close. In this case, the bearish push signal becomes weaker and less reliable. Finally, we arrive at the most important condition for completing a high-quality sell push bar. In this condition, the system requires the body of the red candle to represent at least 60% of the total candle range. However, this percentage threshold can also be customized based on each trader's personal trading style. When the candle body occupies such a large portion of the range, it shows that most of the candle's formation occurred in one clear downward direction with very little resistance from buyers. In other words, the sell side maintained control from the open to the close. Candles that meet this condition are often large body bearish candles, engulfing patterns, or bearish Marubozu, reflecting strong and decisive selling momentum. These are exactly the types of candles that qualify as high-quality bearish push signals. So now we've walked through the three core signal types of the system: absorption, exhaustion, and push. These are the fundamental building blocks behind ApexFlow Zignal. And at this point, we're moving on to the next section, where we'll explore two additional signal types. However, it's important to understand that these are not completely new signals. Instead, they are advanced signals that are formed by combining and expanding on the three main concepts we've just covered. We refer to these as concept signals. These advanced signals help you gain deeper insight into market behavior and take your trading decisions to the next level. Before we move on to the two concept signals, I'd like to take a moment to introduce the system's condition settings panel. Here, you can fully customize the rules used to identify absorption, exhaustion, and push signals. One of the key strengths of ApexFlow Zignal is that you are not forced to follow fixed default rules. Instead, you can remove unnecessary conditions, adjust analysis cycles, and fine-tune thresholds based on your personal trading style. This allows you to tighten the rules to filter for high-quality signals or loosen them to capture more trading opportunities. With this settings panel, the system offers exceptional volume, exceptional flexibility, and customization, supporting a wide range of trading strategies. Most importantly, ApexFlow Zignal is not limited to any specific bar type. Whether you use time-based bars, volume bars, range bars, Renko, or other chart types, the system continues to perform consistently and effectively. This powerful customization capability enables you to build a truly personalized trading system instead of relying on rigid one-size-fits-all rules. The concept signals are located at the bottom section under the Concepts tab. Here you'll find 2 advanced signals designed to answer one of the most important questions in trading. When do absorption and exhaustion signals truly make sense? In real market conditions, absorption and exhaustion do not always lead to immediate reversals. Many traders make the mistake of entering too early, based on a single signal. That's exactly why we created the concept signals. These signals only appear when an absorption or exhaustion pattern is confirmed by a subsequent push move. In other words, the system waits until the market clearly said, yes, absorption or exhaustion happened here, and now it is confirmed by a strong push. Only when both elements align does the signal become truly reliable. This is how ApexFlow Zignal helps you filter out noise, avoid premature entries, and focus on high probability setups. Now, let's move back to the chart. Here, we'll start with the first concept mechanism, which is formed by combining absorption and push signals. First, here, we can see a sell absorption signal, indicating that the sell side is being absorbed by buyers. This shows that selling pressure is weakening and the buy side is starting to gain control. However, relying on this absorption signal alone is not enough to enter a trade with confidence. Right after that, you can see a push signal appearing. This shows that the buy side has gone through 2 critical phases. The first phase is absorption, where buyers quietly absorb all the selling pressure. The second phase is pushing, where buyers actively step in and take full control of price action. When these 2 phases occur consecutively, it reflects a clear transition from defense to offense. At that moment, the system displays a small blue arrow below the push candle. This arrow indicates a bullish concept signal formed by the combination of absorption followed by push. In other words, this is no longer a single signal, but a fully confirmed structure based on both market intention and execution. Similarly, in the opposite direction, here we can see a buy absorption signal, indicating that the buy side is being absorbed by sellers. This shows that buying pressure is weakening and the sell side is gradually taking control. After this absorption phase, a bearish push candle appears immediately afterward. This is when sellers actively step in and drive price lower. When this sequence follows the pattern absorption, bearish push, the system confirms a complete structure. At that moment, you'll see a small yellow arrow above the push candle, indicating a bearish concept signal. In other words, this combination of buy absorption followed by sell dominance creates a high probability short setup. Next, let's move on to the second concept signal in ApexFlow Zignal. Unlike the first concept, which focuses on absorption, this one is entirely based on exhaustion, representing the moment when one side has been pushing price for a long time, consuming a lot of energy, and gradually losing the ability to continue the trend. In this example, you can see a green dot appearing on the chart, indicating that the sell side is entering an exhaustion phase, where selling pressure is weakening, volume is declining, price range is shrinking, and downward momentum is fading. In other words, sellers are still active, but they no longer have enough strength to create another strong bearish move. Shortly after this exhaustion is confirmed, a bullish push candle appears, showing that buyers are taking advantage of this weakness and regaining control. When the sequence, exhaustion followed by push occurs, the system confirms a complete bullish concept signal, clearly reflecting a shift in market psychology from sellers to buyers and creating early, clean, and high probability entry opportunities. Next, in the opposite direction, we move on to the bearish version of the second concept signal. Here, the system focuses on buy-side exhaustion instead of absorption. You can see a light pink dot appearing on the chart, indicating that buyers are entering an exhaustion phase after a prolonged upward push, where buying pressure weakens, volume declines, price range narrows, and bullish momentum fades. This shows that buyers are still active, but no longer strong enough to continue pushing price higher. Shortly after this exhaustion is confirmed, a bearish push candle appears, reflecting that sellers are taking advantage of this weakness and regaining control. When the sequence of exhaustion followed by bearish push occurs, the system displays a yellow arrow above the push candle, indicating a complete bearish concept signal formed by the combination of weakening buyers and aggressive selling pressure, creating early, clear, and high-probability short opportunities. And now, we've reached the end of today's webinar. On behalf of the entire ninZaFamily team, I would like to sincerely thank all of you for taking the time to join us and stay with us until the very end. We truly hope that the knowledge, tools, and strategies shared today will help you improve your trading mindset and achieve better results in the future. If you are interested in learning more about the ApexFlow Zignal system, we currently have exclusive offers available specifically for today's webinar participants. You can find more details below or contact our support team for personalized guidance. Once again, thank you very much for joining us. We wish you consistent and successful trading, and we look forward to seeing you again in our upcoming programs.